Welcome to Market Brief After Hours. Today we saw a fascinating divergence in the markets. The Dow managed to squeeze out a modest gain, but the tech-heavy Nasdaq and the S&P 500 both finished in the red. It looks like the massive chip rally we saw on Monday just couldn't keep its momentum.
That's exactly right. The market has been incredibly choppy. If we look at the final numbers, the S&P 500 fell 0.26% to close at 7,387. The Nasdaq Composite took a bigger hit, dropping 0.97% to end at 25,679. Meanwhile, the Dow Jones Industrial Average bucked the trend, gaining about 86 points, or 0.17%, to close at 50,872.
So what happened to the chip stocks? They had that massive rebound on Monday, but today was a completely different story.
Yes, the rebound fizzled out very quickly. The iShares Semiconductor ETF, or SMH, shed 1% today. This comes after a 6% bounce on Monday, which was trying to recover from Friday's brutal 10% drop, which, by the way, was the worst day for that ETF in 6 years. Investors are clearly getting nervous that this AI-driven chip run has risen too far too fast. For instance, Micron Technology dropped 1% today after a 10% comeback on Monday. Remember, Micron shares tumbled about 20% in just 2 days last week. Broadcom followed a similar pattern, falling 1% today as Monday's gains evaporated. And some of the other major players took even heavier hits. Marvell Technology plunged over 10%, while Qualcomm and ARM Holdings both closed down more than 7%.
It wasn't all bad news across the board, though. We actually saw energy prices pull back quite a bit. What was driving that, and how did it affect the broader market?
Oil prices fell significantly. West Texas Intermediate crude futures lost 3.4% to settle at $88.20 a barrel, and Brent crude dropped 2.97% to $91.45. This was largely driven by comments from U.S. Energy Secretary Chris Wright, who noted that shipping traffic through the critical Strait of Hormuz is rising very meaningfully. Now, even though energy stocks on the S&P 500 fell 1.6% because of this, the drop in oil was actually a boost for other sectors. Materials and consumer discretionary led the index, and real estate got a nice bump too.
Interesting. I also heard some analysts mentioning an IPO overhang affecting investor sentiment. What's going on there?
Yes, some analysts are pointing out that investors are rotating out of secular growth stocks and into cyclical names like Home Depot that stand to benefit from the reopening of the strait. But they also highlighted that June is historically a tough month for equities, and we have the massive SpaceX IPO happening later this week. SpaceX is valued at a staggering $1.75 trillion, and it's expected to be the largest IPO ever. While some see it as adding fuel to the AI and space boom, others are worried it might signal a market top. Plus, OpenAI confidentially filed for an IPO late Monday, which adds even more noise to the AI trade. It's making everyone a bit nervous and keeping things choppy.
We're going to take a very quick break, but when we come back, we'll dive into the global markets, including some massive moves in Europe and Asia, and check in on the latest Forex and crypto trends. Stay with us. Welcome back to Market Brief After Hours. Let's shift our focus across the Atlantic. Europe started the day strong, but couldn't hold on to those gains. What happened there?
European markets had a rough final hour. Most of them closed weak after spending most of the day in positive territory. Early on, investors were optimistic about the potential U.S.-Iran peace deal and some solid economic data from Germany. But toward the end of the session, caution crept back in. Israel continued striking targets in Lebanon, and investors started looking ahead to the European Central Bank's monetary policy meeting on Thursday. The pan-European Stoxx 600 ended down 0.5%. The UK's FTSE 100 tumbled 1.41%, and Germany's DAX slid 0.74%. On the brighter side, France's CAC 40 edged up 0.05%. The FTSE MIB in Italy gained 0.11%, and Switzerland's SMI rose 0.27%.
You mentioned Germany's economic data. Was it a mixed bag?
A bit. Germany's trade surplus narrowed to 14.5 billion euros in April, down from a revised 14.7 billion in March, which was slightly below expectations. However, exports unexpectedly rose by 0.9% to a near 3.5-year high of 136.6 billion euros. Also, German industrial production rebounded by 0.4% in April. Economists are pointing to this as a sign of a potential manufacturing rebound in the second quarter, despite geopolitical uncertainties.
And what about the UK? Any notable data there?
Yes, British retail sales were a major bright spot. Data from the British Retail Consortium showed retail sales jumped 3.7% year-on-year in May on a like-for-like basis. That completely blew past market expectations of a 0.6% gain and marked the strongest growth since April 2025.
That is a massive beat. Now let's talk about Asia, because we saw some incredible volatility there, especially in South Korea.
Absolutely incredible. The South Korean Kospi index surged a mind-boggling 8.18% to close at 8,096. This was the highest ever daily increase for the index, and it came right after an 8% plunge the day before. Investors were relieved by updated data showing South Korea's economy grew faster in the first quarter than initially reported, and they rushed in to buy the dip. Tech giants like Samsung Electronics, SK Square, and SK Hynix soared between 9% and 16%.
Unbelievable swing. How did the rest of the region perform?
It was mostly positive. In China, the Shanghai Composite climbed 1.28% to close at 4,010, despite rising tensions after the Pentagon accused several major Chinese firms, including Alibaba, Baidu, and BYD, of supporting the military. China's exports surged 19.4% in May, and imports grew 27.4%, both beating forecasts. Meanwhile, Hong Kong's Hang Seng Index slipped slightly, down 0.37% to 24,565.
And Japan?
Japanese markets ended sharply higher. The Nikkei average jumped 2.17% to 65,416, and the broader Topix rose 1.14% to 3,896. Chip-related stocks recovered beautifully there, with Advantest up 4.3% and Tokyo Electron soaring 8.9%. Interestingly, the yen held near a one-month low against the dollar amid reports that the Bank of Japan might raise its short-term policy rate and halt bond tapering starting in April 20.
And down under in Australia and New Zealand?
Australia's S&P ASX 200 slipped 0.24% to 8,604 after some disappointing consumer and business confidence readings. But across the Tasman, New Zealand's S&P NZX 50 rallied 1.27% to end at 13,204.
Let's bring it back to the U.S. We got some eye-opening housing data today, didn't we?
We did. Existing home sales spiked by 3.2% in May to an annual rate of 4.17 million. That was much higher than the 1.5% increase economists were expecting. It shows the housing market is still incredibly resilient.
And what about the labor market and trade?
U.S. private employers added an average of 29,000 jobs per week in the 4 weeks ending May 23rd. That's a slight ease from the previous period's 30,500, marking the third straight week of slowing job growth. However, the broader ADP monthly report for May showed private businesses added 122,000 jobs, which is the largest monthly gain since January 2025. On the trade front, the U.S. trade deficit has been cut nearly in half, down 49% this year, following the implementation of tariffs. The goods and services imbalance fell to $55.9 billion in April, representing a massive $700 billion decrease from March, coming in below expectations.
With all this data, how did the bond market react?
Treasury yields edged lower as traders took a breather ahead of upcoming inflation data. The 10-year Treasury yield fell to 4.526%, the 2-year yield dipped to 4.126%, and the 30-year bond yield fell to 5.003%.
Let's pivot to the foreign exchange markets. What are the key technical levels we should be watching right now?
Let's start with the euro-dollar pair. Euro-USD paused its recent sell-off, closing slightly up by 0.08% at 1.1543. Despite this brief pause, the trend remains bearish. The price is sitting well below its major moving averages. The 50-day simple moving average is at 1.1670, the 100-day is at 1.1693, and the 200-day is at 1.1678. If it breaks below the daily low of 1.1527, we could see it head toward the 1.1500 psychological support level.
What about the British pound?
GBP USD saw a nice corrective rebound, closing up 0.33% at 1.3383. It's currently pushing up toward its critical 200-day moving average at 1.3420. However, it's still trading below the 50-day SMA of 1.3459 and the 100-day SMA of 1.3475. If buyers can push it above that 200-day average, it could ease some of the recent bearish pressure.
And the yen continues to weaken against the dollar, correct?
Yes, USD JPY broke higher, closing up 0.15% at 160.40. It's in a very strong uptrend, trading comfortably above its 50-day SMA of 158.88, 100-day of 157.76, and 200-day of 155.48. If it holds above 160.05, the bullish momentum remains firmly in focus.
Let's check in on commodities. Gold and silver had a really tough session today.
Tough is an understatement. It was a bloodbath. Gold plunged 1.68% to close at $4,256, trading as low as $4,236. It is now completely detached below its key moving averages, with the 50-day SMA at $4,617 and the 200-day SMA at $4,411. And silver collapsed even harder, crashing 4.31% to close at $65.19, violently breaking below its 200-day SMA of $67.13. The momentum here is overwhelmingly bearish.
And crypto didn't escape the selling pressure either.
No, Bitcoin dropped near $61,000. This sell-off pushed over 50% of the circulating Bitcoin supply into a loss. Historically, though, when more than half of the supply is underwater, it has often signaled a major bear market bottom. So while it hurts right now, long-term investors might see this as a sign of a bottom forming. Other major digital assets fell too. Ethereum dropped 1.8% to $1,655, Solana shed 3%, and XRP was down 3.1%.
Before we wrap up, let's look at some of the individual stock movers making headlines today. We had some massive corporate news.
We certainly did. The biggest winner of the day was Nuvalent. Its stock skyrocketed over 39% after GSK agreed to acquire the company for $10.6 billion, which works out to about $124 a share. Another major gainer was J.M. Smucker, closing up over 10% to lead the S&P 500. They reported fantastic fourth-quarter earnings and issued a very strong forecast for 2027.
On the downside, who were the big losers?
Aside from the chip makers we discussed earlier, SailPoint dropped over 11% after its second-quarter earnings guidance fell short of expectations, and United Natural Foods closed down more than 10% after missing revenue estimates for the third quarter and lowering its full-year sales forecast.
And that wraps up today's episode. If you find this useful, please follow Market Brief After Hours. We'll see you next time.